accounting students. In this video, we're going to look at the Part E of the project. This will be the first of two videos, and this one will be covering the basic material. In the more advanced one, we'll be looking at the forecasting and then the under and over applied overhead. So this is your project Part E. You'll have the data brought in from both snowboards and from sandboards for the last 4 years, including the current year. And then we need to complete the forecasting portion here. So in this first one, we're just going to guess. So if I'm guessing snowboards for period 1, I'm going to go with 400. Period 2, I'm going to go with 1300. And period 3, I'm going to go with 3600. Again, just guessing these. And with sandboards, I'm going to go with 1900, then 600, and then probably 220. Okay, now we can go and do our calculations. I'm going to focus on the first period. Obviously, once you have the first period, you can go and carry your formulas forward. Again, just double check that they are actually correctly carrying forward. So for sandboards, if I'm looking at the revenue, snowboards, I want the units, and I'm going to go and multiply that by the selling price per snowboard. And I'm going to do exactly the same thing for sandboards. I've got the units of 1900 that I guessed, multiplying by the selling price of sandboards of 200. Okay, now initially we're not going to worry about the cost of goods sold, so we're just going to focus on the cost of goods sold in total. We're not going to try to break it down in materials and variable costs. So I just need to know my units, which is the 400, and my cost of goods sold for snowboards is it's not given here, so we're going to have to go and add them all up. It's a combination of my fixed costs plus my variable costs plus my materials, which should add up to 150. I probably could have just typed that number in. Whereas with sandboards, we know the amount because we are buying them directly from a supplier, and they cost us $100 each. And again, we can ignore that whole section, so we can work out our basic gross profit, which is going to be our revenues, add it together, subtract our cost of goods sold. Okay. Under and over applied, we do not need to worry about that, but I'm going to bring in an adjusted gross profit here where I have my gross profit, and then I go and subtract my under over applied. Again, that will be in the advanced video. Right, so now my other expenses that came through here, these are for the whole year, so I need to divide by 3. Be careful copying that formula forward because it will bring the previous cell divided by 3. It's not what you want. So my operating profit is my gross profit minus my expenses. I'm ready to bring in my interest expense. For the first period, I'm going to look at my loan table, and the interest expense is 1500. That gives me my profit before interest. I have to subtract my interest. And my tax is going to be just 20%. Okay, so my profit after tax, go and take my profit before tax, subtract the tax. We'll go 186,000. I'm going to bring that forward then for my cash flow section. Okay, what am I doing in my cash flow? Well, I'm going to need to go and add back depreciation. That is included in my fixed costs. I'm going to go and work out the amount. That obviously is included in fixed costs. We're not trying specifically to separate it out, but here I would be going and adding it back. Again, if you want to make your life complicated, you're welcome to bring in changes in inventory and suppliers and payables and taxes, but I'm not going to do that. So I've simply got my profit and I am adding back my depreciation. Okay, did I buy or sell any assets? I didn't. Again, want to keep this as simple as possible, but I do need to bring in my loan payment for the second period. That's the principal of the loan, which will bring me to my net cash. My net cash will be equal to cash profit. It's my loan payment. It's already a negative. I can bring forward any cash I had from my balance sheet, and that will give me my closing cash balance. Okay, now we have our balance sheet here. Let's just check the balance sheet actually balances. Yes, it does. Be careful, something could have been omitted, or you could have put your cells in different places to where I had, in which case those totals might not balance for the previous year. It's essential that you go and do that and correct that before you go and start with the current year, because the current year won't balance if last year didn't balance. Okay, for depreciation, I then need to go and bring in this period's depreciation, and there may be formulas here that you can just copy forward. They are perfect. Right, now this is going to be a subtotal which I can bring forward. Hopefully you didn't make your life too complicated down here with changes. So all you have to do is bring in your new cash balance. And then my total assets, again, there probably will be a formula. You're just adding your current assets and your non-current assets together. Okay, ready for owner's equity side. We have our original owner's equity. So this should be a total. I'm going to bring that forward, or you can just add them up if you haven't got that. So I'll bring forward my original owner's equity, and then for my profit, what I want to do is I bring in my profit from last year, and I go and add, but remember you might need to show it as a negative, my profit for this period, which is 186,000. My owner's equity section's done. As for my loan, it's my loan from last period, or you can actually, if you want to do this properly, bring forward your loan from last period, bring in your payment for this period, but you'll bring it in as a negative that you would have brought in from your loan table. And then your closing balance will be opening balance minus plus, in this case, repayment. Finally, current liabilities. Again, I chose to just not make any of these change. Realistically, what would happen is taxes from last period would have been paid, and then we would have a new amount for the current period. I didn't do that, so my owner's equity is 126,1331, and my assets are 126,1331. It balances, and this is the end of the first section. Obviously, you've got to go and copy your formulas for period 1 forward to the next 2 periods. When you do that, though, be careful that your depreciation number comes forward correctly. Be careful that your average expenses here comes forward correctly. And then remember that the interest and income statement, you'll have to go and link those cells directly, and you'll have to go and link the loan repayments here in the balance sheet and in the cash flow to the loan table, because they're going to differ each period. You can't just copy forward. Okay, so end of part 1. Sounds great.